All right. First things first, don't forget to take advantage of the BANC Labor Day deal where you can get 50% off 1 month or 10% off the annual plan. And you can find those coupon codes on the video and in the description below. And if you're an existing BANC member, now is the best time to capitalize on that annual plan savings. All right, so first we'll look at SPY. And yesterday I did draw up projection on all of the indices, meaning I'm trying to predict what I think price action is going to do, which helps you understand what I'm thinking in my trade plan by following the price action. So on SPY, I said that I thought we would go a little bit lower today and we would hit this support zone right around 442. And so far, that is exactly what happened. And intraday, we did start bouncing and price action did close above all the critical support, which I'm calling the 20 daily moving average and the 50 EMA. Now, the second part of my projection is that we'll bounce very impulsively out of here and we'll start closing the gaps above 449 and up there above 455, which is obviously a very bullish projection. The reason I'm projecting higher prices is because we still have a bull trend and we still have very bullish weekly charts. So I'm combining the odds by going with the direction of the trend, meaning we would bounce from support and go hit new highs and make higher lows and higher highs. Obviously, there's a scenario where I'm wrong and we break support, and in that event, we would simply look for the lower prices, which would be down there at 436 and 430. However, the odds favor the bounce from support, and you're already seeing that with the intraday price action. So far, so good. This was the opportunity to get low risk entries, and that way, even if we're wrong and we lose the trade, it's a very small loss and we adapt accordingly, and there's no harm, no foul. If you get in the habit of this disciplined approach of following price action, the odds are in your favor and you're going to do very well over time. And the critical support to watch in SPY is still 442. Below 442, we'll look for the bearish probabilities to increase to go to 436 and 430. But from here, I'm looking for higher prices with the next upside target above that gap fill at 449 and then the gap fill at 455. On the NASDAQ 100 triple Qs, we were down 0.72% today, and my projection in the triple Qs is that we would come down to 370 and then start bouncing higher towards 387. And as you can tell, that is exactly what happened today. We held the support at the rising 20 daily moving average. We still have the bull trend and we closed above the support level. So far, this is simply a retest of the breakout as support before we continue higher within this bull trend. If I'm wrong, price action will start breaking below 370 and then we could look for that lower target at 355 and 347. But so far, price action is still above critical support within a bull trend. On the Dow Jones, we were up 0.2% today, and the Dow Jones was the only major index where I did not project any additional downside. And as you can tell, we closed in the green and we're sitting right here at the resistance right around 346 to 347. There's a very good chance we're going to at least fill the gap at 347. So if you want to wait to get bullish, simply wait for that break above 347, and then above 347, we're likely running higher towards 350 and 353. And the break of critical support will be the loss of that weekly support down there right around 342. So the critical support is 342. On the Russell 2000 IWM ETF, we were down 0.97% today, and I had a little bit of more downside projection towards 184 to 185. And then from here, I think we're going to start bouncing and break out above some critical resistance, but that is going to require the break back above 188. So if you want to wait to get bullish, simply wait for the break above 188 or the previous high at 191. However, if you don't mind buying low, you're managing your risk at critical support, which is 183. And if we lose all of that critical support, then the bearish probabilities increase to fill the gaps below 176. On the ARKK ETF, we were down 0.36% today. Price action still closing above all the moving averages, and the longer we can hold above support at 43, the more likely we're developing a bull trend. Critical support is 43, and if we break 43, we're likely coming back down towards 41 to 42. And on a break above resistance at 44.5, we have the bull breakout that could take us higher towards the gap fill at 49. ARK is easy because you have a gap at 49 and a gap at 36, and you're simply managing a risk around these critical levels to let you know which gap is going to fill first. On the VIX, we were down 0.28% today, and the VIX is looking more and more bullish, which matches the projections that we're going to higher prices because yet again, the VIX tried to break out and got absolutely crushed and closed at the low of the day. This is bullish because this means fear is leaving the market, and if fear is leaving the market, we're likely going back into the bull trend. On Bitcoin, we're currently up about 1.2%, trading right around 26,000, and we're going to have resistance right here at 26,000, which is the negatively sloping 20 daily moving average. You can try to be bullish off 25,000, but if we break that, keep in mind it is likely going to be a straight flush down to 22,000. The next bull breakout is the break above 28,000. On Tesla stock, we were down 0.17% today, and Tesla tested critical support yet again at 245, and yet again it bounced from that level and came up to the resistance between 251 and 255. The break of resistance will be the break of the previous daily high above 258, and then we should be well on our way towards 267 to 274, and then above that we have a gap to fill just below 290. Stay bullish above 245, and if 245 breaks down as support, we're likely going to 230, and then below 230 we have a gap to fill below 218. On Apple stock, we were down 2.92% today, and we gapped all the way down to this very critical support zone at 174, and we now have a gap to fill above 181 and above 190. This is a very large gap for Apple stock, so in the very short term, I think we're at least going to do a dead cat bounce to fill that gap. And then we'll have to see if we can break that resistance zone at 182 and 185. And if we do, we'll likely go fill the gap at 190. If you're bullish and buying this falling knife, you're managing risk at 174. And below 174, we likely go fill the gap at 167. So jumping back over the S&P 500, today went exactly as planned, which was going to be a further downside move to test critical support. And the bulls need to hold critical support to maintain the bull trend. And so far, the bulls have done just that. The definition of following price action is letting the price action do all the talking. And so far, price action just did a hell of a lot of talking today by holding critical support. If critical support breaks, that's going to be more information that we need to adjust to, and then we need to start looking at further downside, but we're not going to assume further downside until we lose the bull trends and lose critical support, and it is just as simple as that. So let the price action do all the talking, and your job is to be on the right side of the trade. Don't forget to take advantage of the BANC Labor Day sale, and those coupon codes are in the description below. And if you're an existing BANC member that's committed for the full 12 months, be sure to take advantage of that annual discount because that is the best discount you're going to see. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.